Welcome to Speidel's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're covering new IRS Form 1098 VLI for claiming the car loan interest deduction and transition guidance for the car loan interest reporting requirements. Get tax planning moves for estates, individuals, and businesses, and deliver meaningful results to clients before 2025 closes at Speidel's 2-hour webinar, Advising Clients in a Post-OBBBA World, Tax Planning Strategies for 2025, on November 10th. You can see topics covered and get registered at Speidel.com under webinars. The IRS recently released a draft of new Form 1098 VLI, Vehicle Loan Interest Statement, which is issued to a person who pays specified passenger vehicle loan interest of $600 or more to a lender on one or more eligible vehicles. Form 1098 VLI was created by the IRS pursuant to the One Big Beautiful Bill Act, which allows taxpayers to claim a below-the-line, non-itemized deduction of up to $10,000 for interest paid on specified vehicle loans. The deduction is available for the 2025 through 2028 taxable years only. The loan is required to be an original loan to acquire the eligible vehicle after December 31st, 2024, and the loan has to be secured by the vehicle. Eligible vehicles are passenger vehicles whose original use commences with the taxpayer, so used vehicles and leased vehicles don't qualify. The vehicle also is required to be manufactured primarily for use on public streets, roads, and highways, have at least 2 wheels, be a car, minivan, van, sport utility vehicle, pickup truck, or motorcycle, be treated as a motor vehicle for purposes of Title II of the Clean Air Act, and have a gross vehicle weight rating of less than 14,000 pounds. The deduction phases out for taxpayers whose AGI exceeds $100,000 or $200,000 for married taxpayers filing joint. Taxpayers claim the deduction on new Schedule 1A, where they'll also report the vehicle's identification number. The new Form 1098 VLI contains boxes for lenders to report vehicle loan interest received during the year, make, and model of the vehicle's identification number, the loan origination date, the loan acquisition date, outstanding principal as of the beginning of the calendar year, and refunds of overpaid interest. The box reporting refunds of overpaid interest represents refunds of interest paid in prior years. If the taxpayer took a deduction for interest that's refunded in a later year, then the taxpayer has to report the refund as taxable income in the year received. In IRS Notice 2025-57, the IRS announced anticipated transition relief guidance for both lenders and borrowers regarding the car loan interest reporting requirements. The transition relief provides that lenders have met their reporting obligation for interest received on a qualified passenger car loan in 2025 if they make a statement available to the buyer indicating the total amount of interest received during 2025. Lenders can provide the statement via an online portal that the buyer can easily access, a regular monthly statement, an annual statement that is provided to the buyer, or any other similar means. For individual taxpayers who want to claim the new deduction for car loan interest, they can rely on the lender-provided information when claiming the deduction, even if they did not receive Form 1098 VLI. We'll be covering the changes made by OBBBA at Speidel's Federal Tax Update webinar on December 18th and 19th. To register for this 8-hour course, go to Speidel.com and click Webinars. That's all for this week. Join us next time for another episode of Speidel's Federal Tax Minute.